Good day, ladies and gentlemen. I hope you are all well, wherever you are. I hope everything is going okay. If something is not okay, for now, just wait. It is, but for a moment. Okay, my name is Njabulo. I'm here again about trading only and nothing else. As you all know, if you don't know, I trade only V75, and what you're about to see now is you're about to witness the things that I've been saying all along. I wrote some notes in the group that I trade with, and this will be the witness of it. This will be the evidence of what I've been talking about. And if you are new, if this is your first time watching my videos, please I'll ask you to just subscribe, because of some great content that's coming your way, and some already are shared, so you can do yourself a favor to go back and view some of the content. Okay, so for those who are already subscribed, thank you guys so much. Thank you for believing in our in our trading method. And for those who are with in my trading group, thank you guys again. I don't usually say this much, but thank you for trusting me. And I'm not here to advise you on how much you should use in trading. That you do that at your own will and at your own risk, because trading is a business, and in each and every business there is a risk. So okay, with that said, let's get into it. As we all can see in the screen, we have volatility 75 index on daily time frame. We will start on daily time frame. What I want to show you here is how you should have got the snipe and the snipe entries on this index, from D1 up until M15. I think it's M15. So we'll start here on daily time frame. We'll do the same thing. We'll determine the trend of the market, and then the market structure, and then that's it. The market structure, it is an umbrella of everything, of high and high low, and then the break of market structures and all those, and the cycles of the market, and the four cycles of consolidation, expansion, reversal, and retracement. Okay, as we can see here, we have V75. The move started here, and then it pushed up, and then this market was broken here. So this is the break of market structure, because we have a low, we have a high, and then we have a lower low here, which is below this low. So that's a lower low, and then it's the same thing here: low, high, lower low, and then but things changed here. Here we have a high, we have a low, and then we have a higher high. So now price is in this accumulation phase here. So this is our demand zone here, or our point of interest. Why is this our point of interest? Because price broke the structure going up, so we anticipate price to come down to this order block down here, and then it will push up, and then if whenever that happens, and then this will be our take profit 1, take profit 2, and this will be our take profit 3, only on daily time frame. Okay, only on daily time frame. So we expect price to come down here to respect this order block, and then push up. Okay, so we are on daily time frame. So let's see what we have on H4. On H4, remember, this is the overall move of the structure from the daily time frame. So on H4, we'll take it from here. Okay, So this is what we have on H4. On H4, we have a break of market structure here, and then we have the previous daily high being taken out by this move. This is stop hunt here. So can we label this as a break of market structure? No, we cannot. But why? Can't do it in Jabulo because we have the candle closing above this. This week we can call it the break of market structure because remember the overall trend of the structure is bearish, so we cannot say this is a break of market structure going up. This is only a stop hunt here for those who sold from this move here. Okay, so the break of market structure will always be below, not above. The break of market structure will always be below, not above. So where is that break of market? Where is that break of market structure? Is down here. Okay, so always after the break of market structure, we check an order block. Always at the break of market structure, we check an order block. And where's that order block? Is this last candle down before this move up? But where do we highlight? Do we only highlight this candle only? No, we highlight it from this wick down here. Let's see. So now our order block is highlighted. Okay, so now let's see what price did. Okay, as we all see, this is a break of market structure going down. Okay, so what then do we do? We always trade in the direction where the structure broke into. We always trade into the direction of where the structure broke to. So in this instance, where did the structure broke to? It broke bearish because the overall move is bearish. So then what do we do? We had to wait for price to reject somewhere here, and then price came up and then to mitigate this order block. So we're supposed to sell from here, and then our stop loss will be just above will be just above here, and then after that our stop loss will have been above this order block here. But then what happened? We see price pushed above this order block here. What then do we see? Remember, we have the first we have the last bearish candle prior to the move up that came down to break what the structure here. And then again on the flip side of this, what do we see? We see a failure market structure. If you don't know what's a failure market structure, please refer to our previous videos. There's a whole video about that. So this move here is a failure market structure because this move failed to take out the previous high. So what we have, we always highlight the last up candle, the last up candle that failed to take out this previous high. So we have to highlight this candle here. Let's see, we highlighted that candle, and then let's come back to this order block here. After price traded above or it violated this mitigation block, what did it become? It became a breaker block. So what do we do in a breaker block? Instead of selling here, so now we have to wait for price to come into this order block and then buy it, and then where will be our take profit? Our take profit will be this candle here. So this will be our point of interest. So this was a buy to sell. Okay, this was a buy to sell. As you can see, price came in here to the is order block. Okay, remember this is a photo, so I cannot drag this, but we can all see that price came into this order block here. So it then mitigated this order block from above. So instead of selling here, so we had to wait for price to come to it, and then we bought, and then this was our take profit, then this was our buy to sell. So what do we do when price gets here? We do the same thing over and over. We sell when it comes to our point of interest, and then then here you sell with confidence. Here you 100%, you're 100% that is gonna sell. Why are you 100% sure that that is gonna sell? Simply because the overall trend is bearish. Okay. So then this arrow here, it indicates that the overall move is bearish. So then there's something else that happened with this move going down, and then what is it? Let's look at the next photo. We have a clear break of market structure, right? The previous photo don't have that line, and then this photo, it has, we have a clean break of market structure here, and then at the break of market structure, we always look for an order block, the last up candle before the change of direction prior to the break of structure. So the last up candle in a structure that is broken on a bearish move, the last up candle prior to the move that broke the structure. So this big bullish candle is the last up candle prior to the structure down, prior to the move down that broke the structure. The last up candle prior to the move down that broke the structure. This is the last bullish candle. So let's see in the next photo. We highlighted it. Then after we highlighted it, what then happens? This is on H4 still, okay? This is on H4, and then let's go to the next photo and see. We're now on H1, okay? We're now on H1. We're moving away from H4, so we need sniper entries only, okay? Your first sniper entry would have been here, would have been here, one, because we were selling. This your first sniper entry, one here, and then we are going down to H1 now. Yeah. As we can see again on H1, again, this is the whole move. This is the move here for on H1. Okay, I highlighted this break of structure here on H1. Let's see it, it's up here. So this shows that there was what, liquidity above this candle. So this candle had to clear this liquidity, or you can say this is your stop hunt. So this candle came to mitigate this candle right here on our left, the last up candle prior to the move down that broke the structure. But do we have the break of structure here? Let's look at the next photo. I think I moved forward. I think I moved a lot. Okay, so here we have again still the trend. This arrow here, it shows that V75 is bearish, and then on H1 now, note the differences of the colors. We have on H4 the red color, and then on H1 we have this green color here. So this is our high on H1. You should price break this, therefore V75, we will consider V75 to be bullish, but in the meantime it is still bearish. Okay, we are on H1. Let's look at the next photo. What do we see? We see the break of market structure here. After the break of market structure here, what do we identify? The last bullish candle prior to the move that broke the structure. Hence this candle had to clean all the liquidity here, then to come and mitigate this candle here. Okay. So after that, what do we do? I said this candle was mitigated by this candle here, and this candle was is the candle that's responsible to clear all the liquidity above this high. So let's see, and then we put our rectangle here, we highlight everything. As you can see, this candle came perfectly to mitigate this last up candle. It came to mitigate it perfectly up here, and then this was our entry for a sell. This is a sniper entry, and then our take profit one would have been down here. But let's look at all this in a bigger picture. Not this color, it's blue. Okay, so that blue color is this color here. So look at how price came to this order block. It came only with a wick here, only with a wick, and then it pushed down. Only with a wick, and then it pushed down. But the time price the time price was going down. What do we see? We see another break of market structure here. Okay, we see another break of market structure. This is the one that you should consider, not this one, because the overall trend is what is bearish, as you can see with this arrow is pointing down here. This is the break of market structure that you should consider. Again, here you had a sell to buy here. You sold from this order block here to this order block here. You were supposed to buy the to the last up candle prior to the move down that broke the structure. Remember, we are on H1. Okay, this was a sell here to buy on this order block here for scalp only for scalp. I do not recommend this. I You can only do it at your own risk. I do not recommend this. So we can see price broke structure here while it was going down. But why do we have this move up here? Let's see in the next photo. Then we have the last up candle prior to the move down that broke the structure. Hence we have this up here. Hence we have this high here. So as we can and see, it's an equal high here. Okay, it's an equal high here. So what do we then see? What then do we do if things are like this? Let's go to the next photo, and then the next photo. What does it say? It says we had another equal high here. Hence, price had to come up. So this was a confirmation of of price coming up to mitigate this order block here, because we had an equal high. No matter what happens, no matter how many days this happen, or hours or years, price will always come up, or to clear the liquidity on equal high, or clear the liquidity on equal low. So in this instance, it was an equal high, so price had to come up and take out all the liquidity above here. But then after that, what happened? I remember we are on H1, so this was our sniper entry number 2 here. Okay, this was our sniper entry number 2. So we have it on a bigger picture. I just zoomed out. Okay, as we can see here, we have the break of market structure, and then we have this equal high that had to be taken by this move. But prior to the formation of this equal high, we have another break of market structure inside here. So this is a macro break of market structure, then this is a micro break of market structure here. This macro break of market structure, this is a micro break of market structure. And as we all know by now, price is likely to respect an order block in a micro break of market structure than a macro break of market structure. Price is likely to respect an order block in the micro break of market structure rather than that of a macro break of market structure. So in this instance, this is the last bearish candle here. This is the last bearish candle here prior to the move up that broke the structure. So we had to highlight this. Remember, we are on H1. This was our sniper entry 1. This was our sniper entry 2. Let's look then if price. Let's see. We can clearly see that price did not respect this order block here. This is for the macro, this order block, but this one here is for the micro. Let's see in the next photo. As you can see, price came perfect, exactly right here, in this order block here. So this is why you will be asking yourself, why didn't price come out to this other block here? Because this is the last move up candle. Hey, I lost with 2 pips, I lost with 5 or 10 pips. No, always have your eyes open. Look for all the possibilities. Always have your eyes open. So we have an equal high that was taken out by this move, and then we have a break of market structure before this equal high was formed. So this is the hidden order block here. This is a hidden order block. So this is one of the top secrets of the order block. I don't know if your mentor have told you this before. If you haven't, then go back to your mentor and ask him about the hidden order block. This is a hidden order block, and it is very important. So crucial because a lot of people would have looked for entry up here, but the entry was here. So this is our perfect sniper entry number 3. Okay. So then what then happens? We are on H1 still, and then we see again another break of market structure after this order block was respected, and then in the macro, in the macro break of market structure, in the macro market structure, in the order block of the macro structure, we see price being broken there, and then price came up to this here to mitigate this order block, and then it pushed down, and then after that, what then do we have? We then have this break of structure again here after it respected this order block here, and then it broke structure again here, and then what then do we have here? What then after the break of market structure? So the last up candle, like the last up the last up candle prior to the move down that broke the structure, and then before this last up candle, what do you see? We see another structure that was formed there with this bearish candle, and then it rejected with this week, and then it pushed up. Then let's see in the next photo, this is the last up candle prior to the move down that broke the structure here. Let's see again. Okay. Okay, let's be here. Yeah, let's wait here for now. As I said, we have another structure here that was formed but was broken by this move up. Notice now then we have this last bearish candle. We have to cover it up until this week here, prior to the move up that formed another another last up candle prior to the move that broke the structure. Okay, this is another hidden order block down here inside here. So let's see with the next photo. We highlight it as I explained it, that this structure is broken here. And then let's see again what happened. We highlighted this secret order block here. So now what then do we have to do? Okay, I don't know what happened, guys. Oops. I really don't know what happened. All these are the notes on my group. All these are the notes. Okay, all these are the notes in my group. Okay, where we were here. Okay, this hidden order block here, and then we highlight them both, the hidden one and the most visible one. And then what then will happen next? Hence the question mark. Will price come and mitigate this order block and then go down because we're on a bearish trend, or price will come and mitigate this order block? Will it violate this one here? But remember, we have a micro break of market structure here, as you can see also here. We have a micro break of market structure here, but still we have a failure market structure here. So price is likely to respect this hidden order block or this order block of the failure market structure here. And then let's go down to M15 now. To M15, as you can see, we have a high, low, lower high, a lower low, lower high, and the lower low. I wanted to show you how I do it. I don't come from here and say low, high, lower, high, low, lower, high. No. We have to take the bigger structure. Okay, so as you can see, I also highlighted the break of market structure with 1, 2, 3, and then I removed all the other things, so we are left with the break of market structures only. So here I don't have to spend so much time on it, because it's we all see one thing here. So after the break of market structure, we always look for an order block. So therefore, we have to look another block on this structure. We have to look another block on this structure. We have to look another block on this structure. Let's see, and then here we are. We highlighted them. The last up candle prior to the move down that broke the structure. As you can see, the move from from this low here came to mitigate exactly this last up candle, and then while it was going down, it broke the structure from here. And then we have the last up candle, which is not mitigated yet. So what do we then do we do then? Let's go to the okay, let's be here for now. As you can see, we have a failure market structure for this high here. Okay, but then do we have to say price just suddenly rejected here? No, we don't say that. Let's go to the next photo. Then we highlighted another candle here. We highlighted another candle that this the move from the move from below here, it came to mitigate here. But why did it come to mitigate above here? Let's see. Because we have what? A structure that was broken here with a microstructure. Remember, this is a macrostructure, this is a microstructure. By the way, this is sniper entry number 4 here. This is sniper entry number 4. This is sniper entry number 5 here. This is sniper entry number 5. So we have a bigger structure and the macro structure, and this is a micro. This is a micro. Then another hidden order block where inside here. So this was a perfect entry, sniper entry now number 5 inside here. Okay, so this was a sniper entry number 5. So again, what then do we have? We have another break of market structure. But where is that break of market structure? It's here. Okay, so this big one is a macro break of market structure, but we have another micro break of market structure, and then above it we have this candle that looks like a failure market structure here, but it is not a necessary failure market structure, because this week here respected this, mitigated this order block here. As you see the price pushing down, and then at this break of market structure, what do you look for? The last bearish candle prior to the move that broke the structure, which is here. Let's see now in the next photo, and then it is highlighted here. And then price was on accumulation phase here, and then but still, what do we see? What then do we see below this order block here, besides this break of market structure and beside this mitigation here? We see, let's notice we have an equal low here. We have an equal low. Always whenever there's equal low, price will come down and clean all the liquidity below it. So So now, what then do you anticipate? You anticipate for price to come up and respect this hidden order block here, this hidden bearish order block here, and then we have another order block which is not mitigated yet, but we all know by I now that whenever we have a macro structure and a micro structure, price is likely to respect the order block in the micro structure. So in this instance, we anticipated price to respect this order block here, and then the equal low also the other I was talking about, as you can see, the dollars here. So there's too much money below this move, and then going back to H4, we expect to enter here for a sell. Then this will be our take profit one. Why take profit one? Because there's money below here on M15. So this here will be our take profit one, 642876.75, and then this will be our take profit 2520306.81, and then after that we expect price to push back up and then to mitigate or the order block on daily time frame. So guys, this is all that I wanted to show you. This is how to enter, and this is how to take a profit, and this is how to capitalize from higher time frame to a lower time frame. So I hope you got all that you needed to trade order blocks, and then you got all what you needed to get sniper entries. So here we had 5 clean sniper entries, like 5 perfect clean sniper entries. Remember again, I'll say it again for the last time. This will only happen only if you trade one thing. This will only happen if you trade only one thing. If you trade gold, just stick to gold. If you trade Nasdaq, then stick to Nasdaq. If you trade USDT, stick to USDT. If you trade V75 like I do, just stick to V75. If you trade a currency pair, for those who trade currencies, I would recommend to you GBP USD and GBP JPY and USD ZAR. So I'll recommend those currency pairs for you. Euro USD, I do not recommend it much because it is so popular. So it is easy to be manipulated. So you can only trade it on a higher time frame. Only trade it on higher time frames only. So, but I'm not here to advise you on that. I was just here to show you how to get sniper entries on anything that are trading. So in this instance, it is on V75. I hope you understood everything, and then if you didn't, there is a comment section below, and then it is open. Then ask anything that you want to ask, and also there's a link below to get in touch with me on Telegram. So this is it, guys. I hope it was fruitful and you did not waste your time by watching this. Peace out, guys.